Welcome back, traders. In today's video, we're looking at NZD, which is facing resistance at 0.6050. If you're interested in finding out more, then make sure to watch the full video where we will discuss everything, including the recent New Zealand employment data release and its impact on the currency pair going forward. As we can see on the 1-hour time frame, NZD USD is now trading at around 0.6045. After having hit our resistance level of 0.6050 earlier in the session, we have seen some profit taking at this level, with the market now moving back towards the previous support level, which now acts as a level of resistance. This price action has been driven by the recent New Zealand employment data release, which showed that the unemployment rate unexpectedly rose to 3.7% in the third quarter, from 3.2% in the second quarter. This was the highest unemployment rate since September of 2022. Now, we did have a bullish outlook for the Kiwi after the RBA hiked rates by 50 basis points last week, which took them to a peak of 5.5%. However, this latest employment data release has put a bit of a dampener on sentiment, as it showed that the economy is not as strong as previously thought. As such, we could see some profit taking in the currency pair, as the market begins to price in a potential pause in rate hikes from the RBNZ in the near future. That said, NZDUSD is still holding up relatively well, given the circumstances, and the overall market sentiment remains bullish in the short term. This is supported by the momentum indicators, which are all pointing higher, and the MACD is also bullish. Furthermore, the fact that we are seeing profit taking rather than panic selling suggests that the bulls are still in control. If we look at the broader picture, it is clear that NZDUSD is in an uptrend on the weekly time frame. The price has been consolidating within a channel since the beginning of November, and each time it has touched the upper boundary, we have seen buy-in interest come into the market. This suggests that there is a lot of support for the Kiwi at these higher levels. That said, we have to keep in mind that the RBNZ may be nearing the end of its tightening cycle, which could result in less upward pressure on the currency pair. In fact, the latest OCR projections from the RBNZ show that they expect to hold the OCR steady in 2023 before cutting rates in 2024. This would be in line with other central banks around the world, who are starting to ease monetary policy. As such, we may see NZDUSD consolidating over the coming months as the market begins to price in a more RBNZ. That is not to say that the currency pair will not continue to move higher, but we should expect any rallies to be met with profit taking from both speculators and the RBNZ. So what does this mean for our live account? Well, as mentioned, we had a target of 0.60504 this week, and we actually hit this level earlier in the session, which means that we have moved our stop loss to break. With the market now moving back towards the previous support level of 0.6, we are keeping our position open for now, and we will set a new take profit level at 0.6080. This gives us a risk-to-reward ratio of 1 to 1.67, which is in line with our usual criteria for entering a trade. That said, we are closely monitoring the employment data releases from New Zealand and Australia next week, as this will give us a better idea of what to expect from the central banks in terms of future rate hikes. If the data comes in stronger than expected, then we may see our take profit level moved higher. But if it comes in weaker than expected, then we may close out our position. Overall, we remain cautiously optimistic about NZDUSD in the short term, but we are keeping a close eye on developments. Thank you very much for watching, and see you in the next one.